So, sometimes next year, Digitex Futures Exchange is gonna go live. We don't know exactly when. It's maybe gonna be in 2 to 3 months, maybe by the end of March. We don't know. I don't want to speculate on the exact date. But we have some time in front of us to practice and learn on this beautiful testnet that they deliver to us, and we can learn and develop a realistic plan in order to be ready to trade real money once this thing goes live. And I had some people who asked me about creating a little bit of a video on some ideas or some some advices about how to trade on DFE using a small account, starting with a small capital. So here it is, 5 tips to trade on Digitex Futures Exchange effectively and simple with a small capital and making a profit. Okay. Before I move on, I want to make sure you guys all understand that I am not a licensed financial advisor or a broker dealer, and the content provided is for educational purposes only. Past results are not indicative of future returns, and futures trading contains substantial risks of loss and may not suit for every investor. So please do your own research as well. I'm solely expressing an opinion over here, okay? Another thing that I want to say while I'm at it, before going straight to the point, is that recently I have been working with my good friend Scott Pulsini. He pulled millions out of the market by trading thousands of S&P mini futures contracts every day. He was responsible for 10% of the S&P 500 futures volume daily, on a daily basis. He is an amazing trader, up to date, and we started working together and helping other traders on coaching and mentorships. Here we got some videos from Scott talking about order flow. And so please go ahead and subscribe to our mailing list so that as soon as you got some new content, you can be notified. Here, there's a little bit about Scott, and this is me. I trade mostly the NQ and ES, so NASDAQ and S&P 500 E-mini futures, as some cryptocurrencies. And so please, if you have any questions or suggestions, feel free to contact us, and we will be happy to help for anybody who wants to learn this beautiful job, because it's gonna take some effort, but we are here to help. Okay, so let's go to our topic of today: 5 tips on how to trade on Digital Futures Exchange effectively and in a simple way with a small capital. So right here, I'm starting this with 25,000 Digitex. I asked some opinions left and right in some channels, and on average, it looks like the majority of people is probably going to be starting with somewhere around 10,000 to 50,000 Digitex. And so with 25,000 being like the most likely starting point. So I'm going to recreate this by using an account with 25,000 Digitex. So the first So there are really a lot of very good strategies to be able to use to trade profitably on Digitex Futures Exchange. You can use technical analysis and just read the charts and plot indicators and oscillators and moving averages, and using classical charting, classical technical analysis. You can use order flow, or you can use market profile. There are really a lot of advanced tools, but for the purpose of this video, I am just gonna talk about some simple tools that any trader, even unexperienced traders, can learn and take advantage from, and that that you better keep in mind, and apply to this market. And so here are five tips to trade on Digitex Futures Exchange profitably and with a small capital. Okay, so the first thing I want to say is very simple. So look at the spot price and try to enter, in your position, either long or short, at a premium or at a discount compared to the spot price. So what I mean by that is, like, if you want to go long, look at where the spot price is. You don't want to go long here at 900 against the spot price at 98. You maybe want to go long and be, I want to go long at 90 and 900, but you're already $2 higher than the spot price. So try to enter below and enter more like here. Okay, now right now I'm gonna be behind all this queue, but let's enter even at 90. I don't know if all this like 1 million contracts here is gonna get filled. So that's a lot of contracts, but still, it's better than entering right here above the spot price. Okay, and the same if you want to enter short, try to short at the premium. If you want to sell, and take advantage of a fall of Bitcoin. If Bitcoin is now trading at 93, you can still sell at 95, but try to see if you can get filled even at 900. That's even better. Okay, if you happen to be able to get filled over here, you are already at an advantage, because the spot price is gonna have to travel way more far for you to be there you go. See, now I got filled, and I can try to take it off over here. If it's gonna be a little bit difficult to get filled, so I'm gonna try to get filled over here, because there are 607,000 contracts over here, and I'm at the end of the queue. So there is a chance that this thing can still go higher and go fill me over here, and that way I can close everything at 900 for a profit. You understand? So always make sure you are trying to short at a premium. There we go. Even over here I could possibly add another position. I'm gonna take it off right now, but 95, I might be able to get filled pretty soon. I might be able to get filled over here. That could be highly possible. So again, if you want to go long, try to go long below the spot price. If you want to go short, try to short above. There we go. Now I got filled again. I'm gonna try to take all of them off if I am able to get filled over here. Let's see what happens. It's gonna take a little while, but I might, because that one, it took some contracts off, so it got back in at the end of the queue. So let's see if this can get filled over here. There you go. And now I am going to take this one off over here. There we go, 600, and close. That's why I said let's put another one there on the queue, because if this one goes up, I can get filled right there immediately and take both off. Okay, so taking advantage of this kind of little games. Let's try another one. This is a 97, 98. I'm gonna put one here at market, and I'm gonna short two over there and try already to get filled if I can. So if this one goes up, there are already only 40,000 contracts. It might be able to get to fill me those are above, maybe. Otherwise, I'll take just this one off. Okay, there we go, and boom, I'm gonna get out of that immediately if I'm able to get filled. There we go. Okay. So this was one of the one very useful thing. I know it sounds really obvious, you know, try to sell above the spot and try to buy below, but I know that oftentimes, you know, you are looking only at this and you don't even notice, you know. Sometimes I see people be like, oh, I want to go long right here, but you're buying at a premium. So don't do that, you know, try to buy below, you know, you have all the advantages of do that. Okay, so second thing, when you see sometimes you will see the book you know, getting cleared and having the opportunity to enter in the book really early. So just take the opportunity to get in the book really early. So what do I mean by that? Let's say I'm gonna try to do an example. Let's say that you want to short over here. There are only 7,000 contracts. So there you go. You try to, as soon as you see that the price, the book gets very small as far as number of contracts, try to get in early, you know. And even if somebody would clear a book above over here on the ask side, let's say somebody buys and clears the book and it doesn't show any. I mean, let me take this one off because actually, no, we might be able to go down and get filled. But let's say, for example, somebody buys over here and clears the book, and you see that suddenly go from 144,000. There's nobody, you know, or maybe like, I don't know, 50 contracts or 100 contracts. Just put in a position right away. You know, try to get in line right away, because it takes a second for the price to go up, fill you, and come back down. So you can have a chance to take one tick profit immediately, okay, without having to wait in line for so many people to get filled. Okay, it probably sound simpler, you know, easy to say and more difficult to do. With a little bit of practice, you'll figure it out. See, like there was like a 7 somebody bought, and there was a room over there to enter, and I was a little slow because I was talking, but it was, for a moment, there was only 7 contracts in the book. So try to enter immediately, because when somebody can go there and buy, you're gonna get filled immediately, and you're gonna be able to take it off over here for one tick profit. Okay. And I'm saying this here as an example on the ask, but the same can happen on the bid. You know, sometimes you see, you know, a move that gets somebody liquidated and clears the book. Clearing the book meaning that, what does it mean, clearing the book? Maybe I don't know if I am able to understand what it means, but clearing the book means like let's say somebody sell down here a lot of contracts and fills this price and this price and this price and this price, this position, these orders. You know, somebody sells a big order, being able to fill all those ones. When this happens, there will be, for a slight moment, there's not going to be anybody here in the book. So for that moment, you can get in line right away. Okay, so try to notice all those little things and take advantage of them. Okay. Okay, so another thing that you wanna keep in mind is this. Most of the times we are gonna be trading one tick at a time. Okay, you getting short and take profit below for one tick, you know, and because, you know, being able to trade commission free, you know, that's the advantage, you know, you to be able to do that. Market is going up, but I don't see it going any much higher, so I'm just gonna short this and take some profits over here. Sometimes you'll see you know, you're gonna be able to take one tick profit at a time, but you know, the market doesn't stay in a range to be able to take one profit all the time. So look at the charts. Look at the chart and you'll see, okay, right now we have a range, okay, a range that, let's see if I can find a, you know, a range like here, you know, or even smaller. Sometimes you can stay in a range, and while you're trading, you can take advantage only of one tick profit, but it's not gonna stay in range forever. Okay, keep in mind that markets always go from a state of range to a state of trend. They go from range compression to range extension. Okay, from my one of my mentors, Doc, always used to say that. You see, like he did right here. It stays in a range, bam, goes into a trend, then goes into a range again. So you can expect that if we have a range over here, we are going to go into a trend at some point. We don't know exactly when, but it is going to happen. So be careful when you see a range that goes on for a long time. Be careful because it's going to resolve into a big move at some point. Okay, and so be very careful and try to stay most likely on the side of the main direction. So right now we can see that the main direction has been down. You know, this is the 5 minutes. So let's go to the 1 hour chart, and we can see that. Okay, there you go. We can see that the main trend overall has been to the downside. Okay, so be mindful that you can have a lot of fun scalping one tick at a time, but it's not going to last forever. At some point it might drop again. Okay, it might even go up, but you know, if it has been going down for so long, higher chances are that it's gonna go down even more. Okay, so be mindful of that. Always be careful that if you start to see a big drop and you're in a long position, just get out. Okay, I'm gonna explain that also now pretty soon. Okay, so that's another thing. You can plot indicators like Bollinger Bands, you know, to see when the markets are in a state of compression or in a state of trend. But even without, you know, you don't necessarily need that. You know, you can really just look at the chart and see, you know, where it's going. Right now you can see that it's going sideways, but it's not gonna last forever. So just be mindful, be aware of that. Okay, another thing that you can take advantage of by just looking at the dome and the ladder right here is when you see big orders that are getting filled and the spot price goes beyond the big order, you can take advantage of that. Let me try to explain. Let's say here we got like a 400, that's a 4 million order over here. That's a 4 million order to buy. Okay, let's say the spot price goes below and goes to instead of 68.90 goes to 68.80. Okay, many times happens that this order is gonna stay here and try to get filled. So many times you can see that this order is gonna stay here and try to get filled, and the market maker, or anyways the seller, is gonna try to push down and so fill this price. So what you can do is, you know that when this is gonna get filled, next stop is gonna be down to meet the spot price. So let's say the spot price goes at 80 and it stays there at 80, you can sell at market here and trying to fill all these guys and put already a limit buy at 68.80, so that when this liquidity is going to be taken out, you are already short and being able to take your profit at 68.80. Ideally, I would like to find a moment where that happens in order to show it directly, which is a little bit rare to happen. You know, sometimes it happens, but you know, when it happens, you see it, but it's not very rare. I'm gonna just place a couple trades right now. 99.01. I'm gonna try to sell the 05 and see if I can get filled. But you know, that I don't know if I explained myself well. You know, let's I'm gonna try to say another example. You know, let's say that okay, let's say that this price, let's say that over here right now, instead of 23,000, there are like a couple million. Oh, there it goes. Now that's that's a big number. Say the spot price drops. Okay, say the spot price drop and goes to 68.90, and these guys are staying over here. There are 4 million contracts. Gonna take, I don't know, maybe like 10 seconds or something before they all get filled, while the spot price maybe stays down here at 68.90. What you can do is bam, go ahead and sell. You know, I'm gonna click it, for example, you know, click at sell over here and get filled at market, and in the meantime just put some profits down here to meet the spot price, so that when this liquidity stays there, you know, next stop, bam, it's just gonna go there and meet your profit. You understand? So that you know, sometimes you know, it can be a little bit a hassle when there are a lot of contracts placed at a level, you know, sitting there, and maybe you have to wait a long time. But in this when these things happen, that the spot price goes down, that's your you know, you got an occasion right there to take advantage of it, you know. So that's a good thing. And I don't know how that many people realize that. They mean, the people who are buying here, they could easily just take their orders off, you know, and move it down. But most of the time they don't do it. They stay there and get hope and wait until they get all filled. I'm gonna see if I can take some orders off here if this thing wants to go down, which is a little bit unlikely while there are so many here on the bid, but it might go down. I kinda see it going down, to be honest, so we'll see if that happens. But anyway, you know, I hope I made myself clear with that. Okay, the last thing that I want to say, last thing I want to say, and the most important one that I don't think more than many people realize is try as much as you can to avoid starting with a very small capital. Try to avoid being undercapitalized when you start trading business. Okay, this is a recipe for disaster. Okay, I hear a lot of people say, well, you know, I just want to start with maybe 1,000 or 5,000 Digitex because I just don't want to risk too much. When what happens instead is that there it goes, exactly what I wanted to say before. Now the spot price goes down. You can sell over here, which I already did before, but you see how long it takes, and I can already place my buy order over here. This is gonna take a little while, but this thing goes down, and we know the next thing is gonna happen. This is gonna go down and get my order filled. I've been waiting there for a little while, you know. So the other contracts I put them in later. Oh my god, what? I'm gonna get out here. There we go. That was a little weird move from the spot price. That was probably not supposed to happen. I don't think there was actually a legit move, but when you see that, just get out, take your profit, and get done. So anyway, closing this bracket, and if that example come up again, I'm gonna show it one more time. But anyway, going back to our to what I was gonna say. You know, when I hear some people say that they want to start with a small capital because they don't want to risk, they say, oh, while in fact they put themselves at a much higher risk by using a smaller capital. It's exactly the opposite, and let me tell you why. I'll show you exactly why, and I'm gonna put it. Let's go to and put wallet. I'm gonna move some of this, and let's go to 24,120. Oh, it looks like there's a little bit of a bug there, so I'm gonna move a little bit more, and let's move 4,000 Digitex. So now I have 5,000. Okay, so what happens? You want to start small. Okay, typical, you start small, 5,000 Digitex, very low leverage, you know, 5x leverage. So, you know, let's go, I don't know what's the error here. So, you know, you don't want to risk, and so therefore you start with very small, and you know, you start to actually make a little bit of money, you know, one tick at a time. You make you know, 100 contracts, and you get 10 Digitex, you know, and you start to like it. You'll be like, well, you know, I made you know, a few Digitex today. I made, I don't know, maybe like 50 Digitex in a day, you know, or something like that. And then you start to realize that, well, it's easy, you know, well, it's fun, you know, I like it. But you start also to think that 50,000, you know, you can probably make more. All you have to do is simply just go like this and be like, well, what if I actually move it up over here to this? I move up this leverage because, you know, in the past days, you've always been making, you know, 1, 2, 3 at a time, and, you know, consistently, you know, it's been a lot of fun. It's easy, you know. Yeah, let me risk a little bit more because, you know, you don't want to just keep making just, you know, 10, 15, 20 Digitex at a time, you know. After all, what is it worth? It's like now it's like 4 cents, you know. So you make what, you know, $1 or $2, you know, a day, and you know, you'll be like, you know, you want to make more, you know. You start to get into that comfort zone where you feel confident that you can do it, and so you start to crank up the leverage and start to risk more. There you go. Sell me that. Look at that. There we go. And you start to crank up the leverage and be like, yeah, you know, I'm good. I can't lose. I can't lose. You get trained in your brain that you are not losing. Because in the past days, you know, very small risk, very small leverage, you get confident. You start to believe in yourself. You start to feel like, well, I'm never gonna lose this little game. I'm a master, you know. I'm never gonna lose. And that's why you start to go to this. And suddenly, next thing you know, bam, the Bitcoin goes up or goes down big time, you get liquidated and you lose way more than what you have started with. You lose half of your capital in no time, and you will start to add to losing position. You'll start to be like, well, I'm short, it goes up, well, I don't want to lose, because I'm sure it's going to come down. I'm sure. So what you're doing is start to add positions so that you hope that it goes back down and you're going to get filled, because it has been working in the past days, for 5 days straight, you made a little bit of money. And so, you hope to be able to do it, but, instead it is how can I say, inevitably going to happen, that is gonna go against you and you're gonna get liquidated. And even if your amount is small, you're gonna lose it. So try to avoid that. Okay. What you want to do instead is try to start with a higher capital, at least, 50,000 to 100,000, 100,000 I think would be ideal, in my opinion, and keep leverage low. You can probably go with 5 and keep. I have too many contracts on for a. Oh yeah, come on. Yeah, I know balance is not enough. I can probably go to plus 10. Yeah, okay. Start with a bigger size, bigger initial capital and small sizes. Okay. If you start, let's say you are able to start with 100,000 and you put, position sizes of, 500 to 1,000 Digitex, 1,000 contracts at a time. And you can do it, and you can keep the leverage really low. And even if you have, 1 or 2 losses because the price goes against you, you're not gonna suffer it. You're not gonna feel bad about it. You're not gonna get scared because you're, after all, you're not gonna be losing much. So you're not gonna panic. You're not gonna be in a position where like, well, I wanna add more. You're not gonna feel bad about it. And when you feel bad, you start to do bad choices. Like adding to losing positions. Or taking losing trades. When the price could have been easily going into your direction. So ideally it's the best if you can start with a higher capital and keep position small. Okay, this is absolutely probably the number one most important thing that I can tell you. Okay, if you really can't, because you don't have the possibility, that's fine, but don't keep your expectations in place. Okay, so if you really want to start with a small capital, keep your expectations in place. Okay, try to keep your leverage not higher than 5, and let's go with 50 contracts. Trade with 50 contracts, keep it small, and don't try to double it up in no time. Don't do that. Okay, this is a recipe for disaster. That's mostly what I'm saying. Okay, so I think that's the most important things that I wanted to say are there. We could explain a bunch of strategies, to actually put in place, but maybe we can do some other videos, or some other longer videos to explain that. But even if you apply those simple tips, that I explained before. Take a look at what happens, on the ladder, and those big orders that you've seen me feeling it already a couple times here when it happened. So even just with those, without a lot of technical analysis or without a lot of advanced order flow skills, you can still find a lot of opportunities throughout the day. These things trade 24/7. So just focus on simple stuff for now, and then later on add more advanced strategies. Okay, but focus on simple things for now. Okay, so this is it for now. This is not gonna be the only video. I hope I can provide a little bit more help, but go hit me up on the website, text me, write me, send me an email, and we can set up some more intense coaching sections, and maybe even group session, for people to and go more deeply into these topics. So to teach everyone more advanced stuff, and I'll be happy to help. Okay, so we'll talk soon. I'll see you in the chat, and be safe and keep your leverage low. Okay, bye bye.